Hey everyone, and welcome back to another episode of Crypto Invest. It has been another crazy day in the market today, and I do have a lot of things to cover, so let's get right into it. But first, I do want to say that this is for informational purposes only and should not be considered as investment advice. Well, first up, I do want to let everyone know that I am flying to Vietnam for vacation starting this Friday. So starting this Friday, I will be offline for a few days until I get situated overseas. And once I do, I will continue to produce video and upload them as scheduled. But the time as I upload them will be a bit different due to the time zone. So if you don't see me online for a few days, knowing that I don't have access to the internet at the moment. Also, I want to say thank you to everyone who has been supporting the channel and me. That means a lot to me. And if you are new to the channel, I'd like to say welcome. And with that, let's get into today's topics. So THEO. THEO's website went down the last couple hours, and the reason why is because THEO and Coinbase is on a scheduled maintenance. The website for THEO is up and running now, but do know that it is not fully functional. It is partially degraded service at the moment. I think you can sign in and look at your account, but I'm not sure if all the trading function is working yet at the moment. So keep that in mind. On to another exchange that I'm not too happy with. This is a little older news. I have a video that I spoke about this before. This particular article on CoinFox was back on October the 17th. But the issue is still going on today. I have a friend personally reach out to me because he could not withdraw money from Bittrex. Bittrex basically froze an account due to enhanced verification, which is not true. So let me show you what I mean by that. So on your screen is a picture that was sent to me from his laptop. Basically, it's showing that they requested him to verify himself using enhanced verification process, which he has. So he provided the ID, he provided all the required applications, and after that he did receive this message here that your application for enhanced account has been approved. So he thinks that now he can enable his account and withdraw the money. However, if you go to the next page, when he tried to withdraw the money, is saying that his account is still disabled and it doesn't give him any other function than contact support, which he has sent multiple support tickets. It has been almost 3 weeks so far with no response from Bittrex at the moment. And knowing that he is not the only person, I do have quite a few people that I know that are currently in the same situation where they have money in Bittrex for over a few months and they could not withdraw the money because somehow after they verify themselves via their method on the website, they still cannot withdraw the money. So at the moment, I'm definitely not happy with Bittrex. I do not recommend anyone using Bittrex. If you ask me what is the alternative, I would say Binance. Do know that I do not endorse Binance at all. I do have an account with Binance. I do hold some IOTA on Binance because that is pretty much the only place you can easily buy IOTA nowadays. So if you want to join Binance, I will leave the link in the description below. Do know that that is my affiliate link, so I do get something when you trade. I think I get a percentages of the trading fee, which is pretty minimal. But if you don't want to use my affiliate link, just go ahead and Google Binance and just sign up with Binance from there. Like I say, I don't endorse Binance. I don't endorse any exchanges. What I do endorse is the fact that keep a minimum amount on exchanges, whatever necessary for you to do what you need to do on the exchange, and move the rest of the money to your cold storage like a Ledger Nano S or a Trezor. That is by far the safest way to store your crypto at the moment. So keep that in mind. Moving on to today's action. So take a look at BTC USD. So BTC USD today is doing pretty well. It's maintained, close to $17,000 all day. Certainly yesterday when the CBOE future market opened, you did see the initial surge, and then it cool off for a few hours, and then you see another second surge, which is this candle here. So these are pricing from Coinbase, and these are the hourly candle. So that's kind of what we are at the moment. BTC holding strong at about 17,000. And I do apologize if these prices you don't see moving. The reason why, because Coinbase is under maintenance at the moment. So if I switch them over to Bitfinex, you will see that the price is now about 16,420. Now, although Bitcoin price from a USD standpoint seem to be pretty much the same as it was earlier today, so not a whole lot of movement during today. But if you take a look at Ethereum have a monster run today. Definitely tested the old high of around 520, 530. Went past that, go all the way up to 550, and now we are basically settled at around 525 the last 4 hours. So quite a bit of a monster run there. Now, Litecoin have even a bigger monster run than Ethereum. It basically went all the way up to a high at $275. And keep in mind that yesterday it has a monster run all the way up to about $200 before pulling back to about 180, 170. And today it continued its monster run all the way up to 275. And right now it's taking a step back at around 240. But who to say that this won't continue to go forward? The momentum seems to be pretty strong for Litecoin. I mean, Litecoin has been a pretty quiet cryptocurrency for a long time. I talk about Litecoin on this channel quite a bit. But lately, you know, with the fact that Charlie Lee was on Clenbeck, and also the fact that BTC price has gone higher and higher, a lot of people thinking that Litecoin is a better alternative because it's still fairly cheap when it was at around $100 or sub $100. And they basically start beating Litecoin up to all the way to 250. There really isn't any news at the moment to justify these price increase from Ethereum and Litecoin. But if you take a look at the market overall, not only that Litecoin and Ethereum up, everything else is also up. You take a look, IOTA up 11%, Dash, Ripple, Monero are up about 7%, and NAM continue to be up 10%. And everything else seems to be up a lot. Populous up 43% today. As you can see that a lot of cryptocurrencies are up at the moment. So I do believe that a lot of people are taking profit from Bitcoin. So Bitcoin ran all the way up to $18,000 or so after the CBOE futures. And people were taking profit, and that profit then being flowed back to other cryptocurrencies at Ethereum, Bitcoin Cash, IOTA, etc. And what happened before the CBOE launch, which is a couple days before that, people were also taking profit. So remember that Bitcoin had a monster run up to about 20,000, then it pulled all the way back down to about 13,000 a day before the CBOE opening. And at the same time, the altcoin is pretty much staying the same. And in my opinion, what happened there is the fact that people was uncertain about what the CBOE future market will hold for Bitcoin, but now they do know that the CBOE quite positive for Bitcoin price, and that means that they are quite bullish on the rest of the entire market as well. So after taking profit from Bitcoin, they are looking to, one, cash out that profit, and two, trying to deploy either or partial of the profit to another cryptocurrency, hoping to continue to gains from that cryptocurrencies. And this is not an isolated phenomenon. This happens all the time, right? You see first Bitcoin have a major run up, and then Bitcoin, it's kind of, I wouldn't say correction, I would say Bitcoin is kind of like taking a break, and then the profit then flow into altcoins, and now all the altcoins are up. I don't have any proof of that, but certainly that is what I believe is happening here. Because for most of these, there really isn't any news that can justify the price increase. So taking a look at the Bitcoin futures pricing. So this is the CBOE Bitcoin future pricing chart. You can search by going to cnbc.com, and the ticker is XBT.1, and it will take you to the chart here. So this shows you the current contract price for the CBOE futures. And you can also go into the CBOE website to see the current price action for the Bitcoin future. Let me refresh the page really quickly here so you can see the current value. The question I do get a lot is twofold. Number one, what is going on with the actual Bitcoin price? So at 16,786 versus what going on at the Bitcoin futures is about 17,700, for example. These two prices doesn't match up, and how is the pricing mechanic works in these, and what does this number even mean anyway? And then secondly, why is this market matter to actual Bitcoin market when we do now know that they don't actually hold any Bitcoin? So future contracts are cash settlement. They are cash instrument. Everything is equate to USD dollars. So nothing is gonna be paid or sold or transferred using Bitcoin. So let me try to answer the first questions. So in order for you to understand what that price mean, let's go back to the traditional Bitcoin price. So at the Bitcoin price, you can see that on your screen there is a sell size and there is a buy size. So right now the sell price on Coinbase, or also called the ask price. What are you asking for as a seller? You are asking for 16,767, and on the buy side is 16,000 or 17,707. You can see that these number changes all the time because people have different bid and ask. And basically, if you are going to Coinbase and you are hitting a buy button, what you are buying on Coinbase, for example, is called a market order, meaning that you just want X amount of Bitcoin, regardless of what the price is, whatever the current price is. So it's called a market order, and it's gonna execute immediately on the market. So it's gonna go find the closest person that are looking for a buyer, and they're gonna go ahead and take the cheapest person, the closest person, and then they go ahead and execute that contract on whatever they're asking for. So for example, you hit the buy button, you will get the 16,821, for example. If you don't want to buy at the current market price, then what you need to do is do a limit order, meaning that you will only buy when it reaches a certain amount of discount. However, that's the high level mechanic. You got a buy side and a sell side, and the job of the exchange is to match the buyer and the seller, and they try to do this as transparently as possible and as efficiently as possible. Now, that's not always the case, but that's the goal. It's to match the seller and the buyer. Similar to when you go buy anything, when you go buy a car, for example, you know, whatever the dealer wants versus what you want. So you have a bid price, what you're willing to pay for the car, and the dealer have an ask price, what are they asking for the car, and then you and the dealer would then work out what the price that you two can agree upon. Now the market, you don't need to talk to the other buyer. That's why there are exchanges. Exchanges job is to match your buy order with another sell order and vice versa, to the best of their control, to the closest price possible. Now with that knowledge, moving on to the Bitcoin futures. So the Bitcoin future price works the same way. So there is a bid price and there's an ask price. So there's a buyer and there's a seller, and the buyer and the seller, the buyer want X amount of money for the contract, and the seller want to sell them for X amount of money. And the job of the CBOE is to match the seller and the buyer together as efficiently as possible. Of course, all of this is done electronically. Now, what this price means to you is this is the January 18th contract. So let me go into the CBOE. This is the better look. So there are currently 3 contracts available on the CBOE platform. There is the contract that expired in January 17. There's one expire in February 14, and there is one expire on March 14. So what do these mean? These means that currently the bid and the ask, whatever it is, the market price is going for 17,700 for the January 17 contract. And keep in mind, these are high level explanation. I just want to make sure you understand what you are looking at. So if you are hitting the buy button, so you're buying this contract, XBT slash F8, what you are buying is you buying a contract stating that by January 17, you believe that Bitcoin will be at 17,700. That means you broke even. Again, this is a simple explanation. Or more than 17,700, meaning you have a gains. Remember, this contract allow you, in theory, to buy Bitcoin at 17,700, regardless of what the current price of Bitcoin is. Now, the seller, they sell you this contract at 17,700, which is the current price. So if you hit the sell side, the sell button, you are selling this contract to a buyer. That you basically betting that by January 2017, January 17, 2018, Bitcoin price will be below 17,700, meaning you have a gains. These are simple explanation. There are fees, there are other things involved, but high level, that's how it works. Now, you would think that, hey, who would do such thing? Bitcoin is currently trading at 16,806. Who would pay a premium of 17,700, which is about almost 1,000 more than the current price, to buy a contract? Well, the reason why is simple, because this is a bet of the future price. This is the future price that the market is thinking that it will be, and you either could be a seller or a buyer on this price here. So the reason why, as a buyer, you pay a lot more for the Bitcoin price than you would go into the market and just get them $4,000 cheaper is because the fact that you reserve the right to get Bitcoin at this price on or before January 17, regardless of the market price. And because no one knows what the future price is for Bitcoin, the seller has to be compensated for the risk they are taking by allowing you to have this contract against them. So meaning that from now to January 17, if Bitcoin become 100,000, the buyer is gonna owe you $83,000 because you have a right to buy it at 17,700. Now, another reason why you want to do this is because unlike Bitcoin, where you have to pay 16,876 for one Bitcoin, for the future, you only have to pay a portion of this. And I don't remember what you can consider them down payment, but or goodwill payment, but they really is a form of margin requirement. What is your margin that you require to put in? So I'm thinking, and I could be wrong, going out the top of my head, is that the margin requirement for Bitcoin future contract is about 30%. So basically, you put down 30% of this amount to control one contract for Bitcoin that was 17,700 on or before January 17. Same concept for February and March. And that's just kind of how it works. So I hope that I explained to you the mechanic of the pricing and what you are looking at here. Okay, now moving on to the second question. What I have tried to explain, I know this is a foreign concept, it's really hard, it's abstract to a lot of people. Why is this even matter? There is no Bitcoin exchange in hand, you're simply just putting a side bet on Bitcoin futures. Well, it matters because of two things. Well, first up, this is a leading indicator, meaning that this, just like in the traditional Bitcoin market you have currently on any exchanges, this represents the sentiment of all the traders, right? This is all emotion driven. Well, some of them are news driven, but most of the time is emotional driven. This represents the sentiment of all the traders combined. Whether or not, if the price gone up overall, meaning that overall most trader is pretty bullish on Bitcoin. If the price go down, then overall most traders are bearish on Bitcoin. Pretty straightforward. Similarly, in a market like the Bitcoin futures, this represents the sentiment of all the institutional trader. So whether or not they think that Bitcoin have a future and what the future looks like. So if Bitcoin future went up, like the case of yesterday when it first launched, then the institutional investor or the speculator think that Bitcoin futures is pretty bright in terms of pricing. And that optimism will carry over to the traditional market. Not directly, but it will. Because the traditional market will look at that and they will adjust their sentiment a lot of time based on what the institutional believe in the future. Because what happened is, eventually, the Bitcoin future will pave the way for the Bitcoin Exchange Traded Fund, also known as ETF. So, yes, I know we do have the Bitcoin Trust ETF. They're not the same thing, right? A Bitcoin ETF, which is what the Winklevoss brother been trying to work on the last couple of years, is the fact that this is a instrument that you can invest in, similar to a mutual fund, but you can trade on an exchange, just like a stock. And it's actually underlying holding is Bitcoin. So they actually have real Bitcoin holding, and besides going on a market to buy a Bitcoin, like you or I would, and then worry about transfer them to your wallet, worry about safe keep that wallet, etc. The masses, a lot of people like my mom, for example, she's not gonna know any of that. She just want a piece of Bitcoin, so she's just gonna go on the ETF market in the future and buy shares of Bitcoin, which represent a percentage of the holding of the actual Bitcoin. Now, those are also institutional products that are made available to retail investors, and it's gonna be the same exact buyer that are playing into the Bitcoin futures in the most part, the hedge fund manager, the pension funds, etc. The speculator. If they are thinking highly about Bitcoin futures, they will certainly eat up the Bitcoin. If there is a huge gap between Bitcoin price today and what the price will be for the futures, and they really believe that the price can get to whatever that amount is in the future that they think is worth, say 25 grand, and now Bitcoin trade for 16 grand, you bet they are going to come in here and eat up all the Bitcoin. So that's one possible reason why. Another possible reason why is that institutional, they like to make money. They don't like to lose money, and they like to have some protection on the downside. Bitcoin currently doesn't offer a lot of protection on the downside because it's hard to hedge against Bitcoin. So the Bitcoin futures will allow institutional to start invest into actual Bitcoin itself. And the way that's gonna do is they're gonna come in here, they're gonna buy a lot of Bitcoin for their mutual funds, for their private placement funds, whatever it is that they are doing, and they are going to go into the future market and short Bitcoin futures as a way to insure themselves, just in case Bitcoin price crash. Then they can at least make money from the future market going down, because the bearish outlook will then overtake the future market. So that's another reason why that these two markets are related. I know it is hard to see, but it is happening. My question is, how much of that is happening today? That's hard to say, but they are related. So I hope that this explains a little more why it matters. Alright, moving on to some other news. Not a whole lot of news that you don't already know. A lot of news regarding to the Bitcoin futures, how Bitcoin went up when future market opened yesterday, how the CBOE website went down, etc. You already knew all of that because I was watching this live and I provided a video yesterday of my recap of what has happening yesterday. So nothing news there. Another piece of news, I'm not going to go into the detail of this because that's not the point. The point is, there are certain people that think that Bitcoin future will drastically increase volatility, and there is a whole set of people believe that Bitcoin future will drastically decrease volatility. And who knows which one is right, which one is wrong. I do want to bring up this article from CoinDesk, because when you see headline like this, you really gotta think that there is a whole other side of expert who thinks otherwise. So for example, the BitMEX CEO think that Bitcoin future will increase volatility based on what he saw yesterday. However, the other side think that it will decrease volatility because it will basically move the speculator So this is the Bitcoin market. They will move the speculator over to the Bitcoin futures, and then the Bitcoin market will have a lot more investor remain, which they're gonna trade less, which gonna stabilize the price. Who knows which one is right, which one is wrong? I just want to point it out that there are two sides of the story. Well, another day, another hard fork. Tomorrow, Bitcoin gonna hard fork again, and this time it is Super Bitcoin. So it is a Chinese effort to optimize Bitcoin through things such as an 8 megabyte block size, which is what Bitcoin Cash currently has, but it also has the Lightning Network. So it had, I guess you can say, the basketball word. I'm not sure if that's actually the case, but it's setting to fork tomorrow, December 12th, at 498,888 block size. Oh, I'm sorry, block height. Now, I do want to say that the more fork this become, the more less desirable for the news and for people, right? So remember, Bitcoin Cash was a huge event. Bitcoin Go also was quite a bit of an event. People would actually buy Bitcoin just for Bitcoin Go. But this one is barely talked about. I would think that this is going to be the case going forward with more and more forks. Now, there are always exceptions. If there are forks with Bitcoin that has high profile people, then that's going to be a different story. Now, I'm not going to go into detail here. Basically, it's going to be the same 21 million coins. However, there is an extra 210,000 coin pre-mine on top of the original 21,000, and that's going to be used to quote-unquote try to develop more infrastructure, more ecosystem. Now, at the moment, I did not get any news from whether or not Ledgers, NanoS, or Trezor are going to support it, or which major exchanges or which major wallet will support this. We're going to have to wait and see. But I wanted you to be aware of that. Now, moving on to this notice here that just published today. I leave a link to this because I think it's quite important. This is the publication that's sent out today from the SEC, the Security and Exchange Commission here in the US, from Chairman Jay Clayton. And Jay put out his statement about cryptocurrency and ICO, initial coin offerings. I'm not going to go into all the details here. I read this once. I need to reread it again so I can gain more knowledge. But I can point you to a few things that are fairly interesting coming out of this. So this breaking down into first the consideration for the investor and the consideration for market professional. So for the investor, the SEC basically is telling the investor that these are pretty much unregulated, cross-border, not a lot of protection. These are brand new way to raise money, especially the ICO. These are brand new markets to regulate. Bitcoin itself as a whole market is not being regulated right now, and that investor need to start asking questions. They need to have clear answer, need to know what they're doing, because if they don't, they can get hurt, and not a whole lot the SEC can do to help them. Because as they say here, please also recognize that these markets span national borders, and that significant trading may occur on system and platform outside the United States. Your invested fund may quickly travel overseas without your knowledge. As a result, risk can amplify, including the risk that market regulators, so that the SEC may not be able to effectively pursue bad actors to recover the funds. So basically, they're telling the investor that the SEC does not regulate these kind of markets at the moment and invest at your own risk. Now, for the section where they say consideration for market professional, it's really going to detail whether or not they believe ICOs, especially, are they a securities or not. And that's something that the market professional, including the attorneys, the accountant, the consultant, they need to focus on their responsibilities to figure out whether or not this is securities, because it's up to them to report accordingly. And if they are securities, then they are subject to security laws, and all the security laws must be followed. And they come out with, if it's not a security, it can be merely called a token. It's a utility token, or structuring it to provide some utility does not prevent the token from being securities. So if it's a token and you try to make the use of the token, for example, you must pay for things with the token, but the main primary reason for the token is for investors to trade on the secondary market, for example, then that is not exempt that particular cryptocurrencies from being called a securities, even though you try to tag on some use to that token. Also, they start talking about those who are involved in selling, promoting ICO and cryptocurrencies. They can be liable if this turned out to be a security. So you gotta be careful of that. The conclusion is definitely something that I feel very good about. Let me just read you this short conclusion because I think this is very important. We at the SEC are committed to promoting capital formation. The technology on which cryptocurrencies and ICOs are based may prove to be disruptive, transformative, and efficiency enhancing. I am confident that the developments of fintech will help facilitate capital formation and provide promising investment opportunities for institutional and Main Street investors alike. I encourage Main Street investors to be open to these opportunities, but ask good questions, demand clear answers, and apply good common sense when doing so. When advising clients, designing products, and engaging in transactions, market participants and their advisors should thoroughly consider our laws, regulation, and guidance, as well as our principles-based securities law framework, which serve us well in the face of new developments for more than 80 years. I also encourage market participants and their advisors to engage with the SEC staff to aid their analysis on the security law. So overall, I think this is a very positive statement. You know, the SEC started out saying that for the investor, you need to be careful what you're doing because these are under regulated market and not much we can do if you got cheated on this market. For the professional, make sure you are aware of the difference between whether or not it is securities or it's not a securities, because if it is, then we're gonna regulate it. And if you knowingly operate without license and without the blessing of the SEC, then you may be liable for your action in terms of regulatory standpoint. And in conclusion, they do like cryptocurrencies a lot. They think that they do believe the SEC do believe that this is going to be a transformative and efficiency-driven, enhancing technology. It's very disruptive, and they are in support of cryptocurrencies. Just make sure that no one do anything shady. Basically, follow the rule. When you in doubt, get involved with the SEC to figure out whether or not the any rule or regulation are applicable to what you are doing. So I'm pretty happy with this statement. Such a relief, because this is such a topic that I'm always very worried about, because US market is pretty huge for cryptocurrencies and the regulation is not always clear on cryptocurrencies, and this at least is still not clear, but it is one step closer and one step toward the direction that we are not gonna consider like a complete ban or anything drastic. So I'm pretty happy, and you should be too. So I'm going to end on that good note. Thanks again for watching. Subscribe if you haven't, and I will talk to you soon. Bye-bye.